Good morning. This is Larry McMillan with a market comment recorded Monday, April 13th, before the market opens. Well, things improved even more last week as the market overcame some resistance at the 20-day moving average and then shot strongly higher, blowing through what we had seen as a target as around 2730 and trading up to almost 2800 in futures terms. There is, this market really didn't pay much attention to the support on the way down and really isn't paying much attention to resistance on the way up. But there is technically resistance at 2850 to 2900. I do think the market's probably gotten ahead of itself in light of the news cycle. The oversold condition was massive, of course, but that's gone now. And we actually have some overbought conditions for, for the first time in a while. The chart of S&P itself is still downtrending, and while this rally has been very strong, I would expect some sort of a pullback. We'll see if it's a full retest or not as it develops. The equity-only put-call ratios remain very bullish. They had a little bit of a negative wiggle last week, but that went away quickly, and so those ratios are now making new relative lows and declining. And as long as they're declining, that they'll remain on buy signals. They don't have to decline all the way to the bottom of the charts in order to give a sell signal, but they could reverse upwards anywhere, and that would still be a sell signal. But right now, that's not in the cards. They're strongly on buy signals. Market breadth was spectacular last week. There were two 90% up days, and so both breadth oscillators remain on buy signals. They have, however, moved into pretty deeply overbought territory. And while a new rally getting overbought is a good thing, um, we've seen many rallies get to this stage and then fail. So if breadth continues to expand on the positive side from here, that would raise the possibility that we've seen a V bottom. At this point, though, that's not the case, and it's more or less just garden variety, hardly garden variety, but strong breadth on an oversold rally is not unusual. Volatility has been a very interesting component of the market. VIX itself is down about 50% from its highs, and it's closed below its 20-day moving average now for a few days in a row. However, it's still around 40, and the VIX around 40 still means we have plenty of volatility, and in general, volatility is not good for stocks. Specifically, of course, each situation is a little bit different. Anyway, the VIX buy signal that was issued about a month ago has another week to run from our trading system that we use for those sort of things. But it's the intermediate term interpretation of the VIX chart that's a little bit more bearish. If you go back to, well, we only had VIX for in live trading for the crash of 2008. The crash of 87, the CBOE backdated VIX to that era. But in both cases, VIX remained relatively high for a while and then eventually crossed below its 200-day moving average, and that was pretty much the bottom of the market. For example, that occurred in March 2009. So we're nowhere near that right now. The 21-day moving, I'm sorry, the 200-day moving average is around 21, and of course VIX is around 40. So from that intermediate term viewpoint, this is still a dangerous market. So overall, we are treating this as still a bearish market, and we're retaining a core bearish position. But of course, we are trading these buy signals around that. If you had bought on previous buy signals, you should be rolling your long call strikes up, taking some credits out of the positions, and raising trailing stops on stocks that you might have bought. So I invite you to visit our website, optionstrategist.com, and this coming Saturday, which is what, April 18th, we'll be having a Saturdays with Larry webinar on Saturday morning. We start with a market discussion, then we have a question and answer session where you can ask questions about any option-oriented thing you want to. And then we're going to have a webinar on naked call writing. So I hope you'll join us for that. And in any case, take a look at our newsletter performance. It's been great on optionsstrategist.com. Thanks for listening.